Greetings from Emirates Chartered Accountants Group. Have you heard of customs audit? Is your accounting system in line with the requirements of Customs Authority? Is your business ready to face a target audit from the Customs Department? Customs duty is a charge on goods imported to the UAE and is levied at either ad valorem, that is percentage of value of goods, or a specific rate which is levied on each unit. Currently in UAE, the rates are at 0% and 5%, with exception of cigarettes at 100% and alcohol at 50%. On import of goods to the UAE, an entity is required to declare the movement of these goods through relevant declarations, depending on whether the entity is in the mainland or free zone. A free zone entity will declare the movement through transit in, transit out, or transfer declarations, whereas a mainland entity will declare the movement of goods through import, export, statistical import or export, or import for re-export declarations. The Dubai Customs Authority is authorized to conduct a customs audit for any period of time and can request an entity to provide stock details which will be compared to the entity's customs declarations processed during the mentioned period. The weight, quantity, and value will be compared with the declaration submitted in cases of general goods, and in cases of diamond, car, and gold, the carat, chassis number, and weight in grams of net weight respectively will be the basis of measure. Any discrepancy which cannot be reconciled by the entity will result in penalties and fines depending on the rate of duty, in addition to the customs duty on the unreconciled quantity. Now, your company can be prepared in advance for a customs audit by ensuring the HS code, quantity, weight, and country of origin of each line item is mentioned in the GRN. The inward reference number, the bill of entry number, is mentioned against each transit out declaration to build a relationship between the goods that came in and moved out. Internal control is in place to ensure that the export value of goods is more than the value of import. The total weight exported is equal to the total weight imported, especially in cases where goods are imported and in cartons and exported in packages. The format provided by Dubai Customs on inventory movement details shown here also highlight these points. An entity can also request for a no objection certificate from the Customs Authority every 3 or 5 years. This will help the company to ensure that their import-export records and stock are matching with the records of the Customs Authority. In such cases, the next audit will be commenced only from the end date of the last NOC. Voluntary audits thus saves your company from additional penalties and fines. For more details on system controls to be implemented and to reconcile your records for customs audit, contact us.